Hi guys, welcome to another video. So for this week, we'll do some in-depth technical analysis, right? I'll be sharing with you some of the setups that we are monitoring, right? Mainly two commodities and we are running on the pound potential setup, right? But first thing first, I would like to point your attention, all right, towards the event calendar for next week. So if you look at this, Monday we still have some of the major banks having their holidays, right? So do not expect much movement starting off this week itself, right? But we do expect some of the currency movement to start being more volatile as the week progresses, especially on Friday. All right, it's the first Friday of the month. So what we are looking at is we do have the US non-farm payroll as well as the average hourly earnings, right? So those who have been following and have been attending some of our workshops, we did share that currently the data which is more important is actually the average hourly earnings. Simply because if you look at the unemployment rate, all right, the last data is actually at 4.9, which is already under the full employment, right, below 5%. So the central banks, all right, the Fed currently is really looking at the average hourly earnings simply because they want inflation to hit their 2% target. All right, so this is more important than the non-farm payroll and the unemployment rate. All right, but of course, having stated that, we do expect that these two data, all right, is still important, just that it's not as crucial, all right, and it doesn't lie as it doesn't has as high weightage as compared to the average hourly earnings. All right, so this is the key data that you might want to look out for this week. Alright, so let's jump into the technical charts. Alright, the first example I'd like to bring you across is the US oil market. Alright, if you see last week itself, price has start to top, alright, and form a top, alright, and it start to roll over. And what we see over here is that we have a potential double top, right? And if you look at the RSI below, we do see a divergence, right? Because price has been moving slightly higher. But in terms of the RSI, it has been forming lower highs. So what we do see is that price has also broke and closed below this previous low, alright, previous neckline structure level. So what we are waiting for now is to put in our Fibonacci tool from the recent high to the recent low. And what we'll be interested at is at the 61.8 retracement level, all right, which is at the 40.5 price level. Right, so what we expect is for price to comes back higher, and we'll look for a shorting opportunity over here. Right, so if I pull in more Fib levels to show you our entries and stops. Right, so how we trade this kind of setup is that when we enter over here, right, our stops will be placed just above the 786 Fibonacci level, and our target will be aiming for this, all right, the previous low, which is 38.3. So if I pull in this, all right, to illustrate to you the risk to reward ratio, right, if you are more conservative, you can put that previous close, all right, but let's just put this, all right. If you look at this trade itself, all right, the risk to reward ratio is 1:3, so it's a very decent trade. And if suppose you are more conservative, you want to take your profit at the previous close, all right, the risk to reward is not too bad as well. It's 1:2.5. Right, so this is basically how we trade a divergence, all right, coupled with a retracement pullback. Right, so this is one of the strategy that we adopt. All right, moving on to the other commodity pairs, which is the silver. Alright, so this is happening on the 4-hour time frame. What we have over here is a potential cipher pattern. Alright, so if I put in the Fibonacci tool, you can see from here to here. Right, let me put in the relevant. Alright, from this low to this previous structure, we can see that price retraced towards the 38 to 50 Fibonacci retracement level. Right, and if we pull in the extension, can see the new high actually touches the 127. So this fulfills the cipher pattern setup. and what we are looking for in terms of this pattern completion is at the 786 level, right? So what we'll be looking for is for price to actually come back down towards this level, and we'll be interested to look for a long opportunity over here. Alright, in terms of stop loss will be placed just below the previous low, right, which is your previous structure level, and target wise we'll be looking for the two levels, which is 38.2 and 61.8. right, so the first target is 38.2 around here, right, and if you look at this risk to reward, it's just slightly above 1:1. Alright, so it's not a very high risk to reward trade, alright, but if you are more aggressive kind, you can actually aim for second target, which is at the 618. Right, if you look left, alright, this is also your previous resistance level. So what we do say is that if you take your profit target at 618 retracement level, you can see the trade risk to reward is close to 1:2. Alright, so this is a pretty decent setup, right? And if you look in terms of technicals analysis wise, right, this 786 does provide with you some previous support and resistance level as well, right? So not too bad. Alright, let me just draw in the triangles for visual aid. Right, so this is how the cipher pattern looks like. Right, so should price comes back down, which I do foresee that there's a high possibility that price will continue dropping further. The question is whether price will respect this level to bounce back up. Alright, definitely I can't tell you for sure. If I know, right, I'll probably not be telling you anyway. Alright, so yeah, so we never know what price will do. Alright, but what we can do is to prepare ourselves to respond to whatever price action actually present to us. Right, the next pair that I want to walk you through in this video, and also something that is in our watch list, is the pound dollar. Alright, this is happening on the 1 hour time frame. Very similar to the oil analysis that we did. Right, what you are seeing over here is price forms a higher high. Alright, and in terms of RSI, you can see it forms a lower high. So what we have is a divergence setup, and price has indeed broken your neckline. So what we do next is simply pull in our Fibonacci tool from the recent high to the recent low, and what we are expecting is for price to come back up towards the 618 retracement level. Right, and once again our stops is above 786, our target is at the 0 level. Once again, a risk to reward of 1:3, a very decent risk to reward trade. Right, and if price really comes back up towards this level, this trade itself, other than just the technical setup, if you follow the fundamentals of the UK, alright, the pound, it is still in a bearish momentum. Alright, fundamentally, the UK, the concern is still on Brexit. CPI data last week wasn't very positive, so overall the fundamental aspect of pound is still to the downside. Alright, so coupling with fundamentals and technical, this gives us a very good confidence that shorting the pound is a higher probability trade than instead of longing it. Right, so this is one that you can keep an eye on as well. The next pound trade idea is on pound franc. Right, we have two setups over here. So let me walk you on the 1 hour time frame, which is this current time frame first. The first thing you notice is that, alright, over here you have a divergence. Alright, you have a lower low, and RSI forms a higher low. And if you notice, alright, price has also closed and broke above this neckline. Alright, and if you follow the standard, standard technical rules that we use to trade this setup, what we're waiting for is a 618 retracement. Right, this is valid. All rules are met on the technical setup, right? But why we are not interested, alright, to actually look at this trade is because if we long pound, alright, we are actually going against the fundamental analysis that we did, which is towards the bearish side and towards the downside for pound. So we wouldn't want to look for any long opportunity going into next week as well. Right, but having said that, will this technical setup be profitable and end up being a winning trade? I can't say for sure, alright. But what we do is we want to align the fundamental aspect of a currency together with a technical. So this is no doubt, right, definitely a valid trade, but we will not be looking into it. So if you're interested as a counter trend trader, right, this is one potential setup that you can look out for, right? But this is not what I want to share with you. Right, the other trade that is together with the fundamental is that what we see over here is that price has formed this low, retraced up, and has broken that previous low and form a new low. So what we are looking at now instead of that is this level, alright, which is the previous structure support level, coincides together with a 50% retracement Fibonacci level. So this is the level. Instead of just now that 618, we are interested at this 50% retracement level to actually short the market. Alright, so if price comes back up towards this, we are interested to short this. Our target will be at the previous low, and our stops will be just above the 786. Alright, so if you look at the risk to reward is a 1 is to 1.5, not too bad, right? So this is a trend continuation setup to aligning together with fundamental as well. Alright, this is happening on the 1 hour. Alright, so let me clear the chart because I want to show you that on a higher time frame we have another setup as well, and this setup is on a pattern setup. Right, so if you measure this high to this, you do see a 38.2, and if you measure the extension of this move, you can see price comes in around the 127. Right, so very similar to the silver that we analyzed just now, we do have a potential cipher pattern setting up. Right, if we pull from the top to the bottom, the completion level for the cipher pattern is at the 786. Right, so it completes around this. So what we are looking for is for price to come all the way back up, right? Highly unlikely that price will actually retrace all the way back up towards this level of 1.416. But should it, eventually really comes up to this, we'll be looking for a short entry over here. Right, stops will have to go above the previous high. And target will be using Fibonacci. Alright, target 1 will be at 38.2, and let me pull the right 2 out. Alright, target 1 will be at the 382 level. If you look at the risk to reward ratio, it's just slightly 1:1, not too bad. Alright, as long as your risk to reward has 1:1, to me that's decent. And if, of course, you are more aggressive, you can aim for target 2, which gives you close to 1:2. Right? So having said that, my take on this is that highly likely this trade, the price will not go all the way back up, right? Simply because the fundamental of pound is still bearish. Right? Unless something changes in the fundamental or sentiment aspect of pound, we do still expect, right? We still expect pound to continue dropping. Right. Having said that, that's all that I have to share with you in terms of this video. Alright, if you have any questions, do feel free to drop your comments below. Alright, we do reply to all the questions that you guys have. And if you have any other suggestions or any topics that you would like me to do a video to talk about, to discuss, do feel free to drop me any suggestions as well. Right, just like how the previous video that we have students and clients asking us how we trade the divergence, and we just do a video for you. So right, so that's what we basically do, right? We basically want to share as much as possible with all traders out there. Right, so with that, trade according to your plan and be cautious for next week, especially for the NFP as well as the average hourly earnings from the US, and I'll see you soon.